Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, I just want to update on the bull flag that's being put in by Bitcoin. Of course, people can get quite concerned, whenever price moves up or down a couple percentage. But in general, we're trying to hit the big moves here over at Alpha Commission. We're not really trying to micromanage our trades. That said, if you do look at the bull flag, of course, we did get rejected at the top there. Now, price, when I was making the video early in the AM this morning around 5 a.m., so pretty much 12 hours ago, half a day ago, we were just in the middle of this pump, and I did suggest that we were very likely to hit 23,000. And the number that I set in order for us to retain bullishness, if you'll recall, was 23,000, right? That would give us that MACD on the 12-hour, that momentum to the upside, that extra push, where if we were able to capture 23,900, approximately 24,000, then we could see this move perhaps carry out, right? And although, we did get a bit of a rejection right now, just kind of cleaning up this chart a bit. This is how we saw the breakup, right? And that previous one was where I said that we were going to go on this move. We did get contained within that downtrend, and then we saw a floor, which 3 touches, you can see this was a trend. We broke up to the upside, and that's how we could target, this 23,000 number, where we had a strong likelihood of either getting rejected, in a clean way, or getting accepted and perhaps trying to retest these levels, just explaining these small little markings that I'm going to be deleting here. Of course, what we don't want to break below is this area where it's kind of just chilling out. It's kind of just hanging out right here, right? I mean, you see this little bit of a wick. It is continuing to fall, but overall, look where it's stopping at, right? Right there at my weekly 5, right there at my green box, right? Look at that, and right there where we would pretty much break our RSI to the downside on the daily, right? We would cross below the RSI's EMA, which wouldn't be great at all, if we do start violating these areas of a 21,900, which just happens to correspond with the bottom of the wick there, like what a coincidence, okay? So again, like there's many different ways to do TA, but of course, whatever works best for you, whether you like to use patterns and price action, whether you like to use, RSI or MACD or the Stokes or whatnot, whether you use diagonals or horizontals, like all of this stuff can be really helpful in planning these type of moves. And yeah, we're just seeing Bitcoin kind of push to the downside, and unfortunately, it is going to just look pretty bearish until we can find some really solid support. I really, I really hate to see it doing this, but that was expected, guys. Remember what I was talking about when we were talking about Ethereum and why I was bringing up Ethereum's, CME chart. There was a very good reason for that. So let's go ahead and just jump over to Ethereum's CME chart, where you do see that we got that drive up that I was talking about. So, previously, I think we were like down, I'm not sure exactly where we were 12 hours ago. But anyway, we would have probably been pretty near the top of this range. I suggested we could see another drive up, but that we would have pretty tough resistance in this area. And sure enough, we just got kind of a rejection off of that. So is this going to be some type of deviation after having filled our CME gap over here? Is this going to be something that then, we just come back down here and fill this CME gap that we opened up when we pumped hard to the upside? Don't be surprised if that happens. And if Ethereum does actually retrace this full move and fill in its CME gap until it catches some type of support, perhaps on this diagonal here or this horizontal, or perhaps just on the CME gap itself, they often act as support and resistance. They aren't just to be filled, they also can act as support and resistance on their own. And in which case we might get kind of a bounce off of that or something, right? So, Ethereum may end up being more bullishly postured than Bitcoin. And so, if Ethereum takes a tumble like this, then potentially Bitcoin could take a much stronger tumble to the downside. You already see that whereas Ethereum is putting in this, really kind of like really aggressive pattern, right? Even as it's pulling back, Bitcoin is just kind of sloppily, making this flag that looks like it may want to fail, right? Now, these patterns do tend to, you know, uh, leave you guessing sometimes towards the end. And so, could there be another bounce and we just get something like this, even a really sloppy one? It could, this thing could really end up being kind of extended, right? And then we make our way up to 24,000. And then the measured move off of that would probably be that the 26,000 to 27,000 that we've been talking about using other metrics. And yeah, sure enough, right there at 27,000. So this is the number that we were talking about that, most likely, we could, maybe have a little bit of a hiccup over here at 25,000, or maybe even get up here to like a 28,000 to this kind of like a breakdown candle area. Or anyway, we're going to enter some type of very heavy resistance zone on this upside. But this bull flag would suggest that if we can break above that $23,000 area, there's a good chance of us putting in that final drive before a potential crash, right? Potential crash to the bottom of the range to grab this liquidity that's down here, just kind of chilling out there. And of course, that could continue to crash further, as we've seen in some of these other moves. Now, do we put in a double bottom or maybe just a slightly, lower low, or do we just drive down like crazy, right, to 10K or 12K or something like this, just something crazy? I don't know. I don't think anybody really knows what can happen next. So, we're just taking it move by move, but of course, we can do our best to try to analyze what could happen. And, I did show you some type of teardrop formations, which could suggest that, if we do end up just rounding out, right? If we do just end up rounding out on this formation, that we're still pretty much in line with that, right? So what would I expect? Perhaps a bounce here around that critical level of 21,000 to 21,500. If we're able to hold on to that area, then that would be an extremely good long signal. Like if we start getting like a bounce like that, I mean, we're pretty much talking about coming up to the top of this wedge, similar to what we've done just like time and time again on these other wedges, right? Right, where we just kind of like pump along the wedge. And so again, like when we talk about these type of like alternative TA, don't be afraid to experiment and just create ideas that work for you. If we do break down out of the wedge, because the bottom of the wedge is never quite fixed, the wedge can always move depending on where the bottom is put in. Once we do find, some ground there, the teardrop, I'm just calling it a teardrop. It's kind of like candy cane support. It's kind of a curve, that suggests where a breakdown might happen. So if we do, define the bottom of this wedge by the next bounce, then most likely we're getting into the end of the wedge somewhere. Could be here, could be here. We have no idea where this wedge is going to end exactly, but the bottom of this next drop will probably define it because I'll have a couple, points to touch, and then I'll have a wedge defined, and then that candy cane, that teardrop, is going to align with the final bounce, right? And that's going to define this teardrop. And where we break down from the teardrop, just time and time and time again, that's where we ended up just losing our support on the chart, where we just ended up going to testing extreme lows, like really extreme lows. And guys, look at this. I even realized this was one of these big teardrops. So we got a teardrop forming right now. We had a teardrop forming over here that was a little bit of a smaller one, more kind of like a, just kind of like a concentrated one. We had one forming here, and they're all a fractal of this big one right here. And I know this kind of TA just like really annoys some people, which is why I like doing it. Not just because it helps sharpen my own skills in thinking out of the box, but also just to stir the pot a little bit, just kind of it's just kind of like a joke, right? But look, we have a touch, a touch, a touch, a touch, a touch. You guys wonder why this shape is being put? Look, it's a curve, guys. It's a curve. This is a curve. This is a parabolic curve where, we're getting all of these touches along the curve, and where we broke down on the curve, that's exactly where you wanted to exit the market. Of course, you could suggest, to exit up, but you don't know because we could have popped up, right? Like you don't know inside of the wedge. You only know after you break down from the wedge, you know, and then you lose this curve, then you have a confirmation that you're going to break down, and it's just happened every single time, okay? It's not enough just to break out of the wedge itself. Why? Because the wedge bottom can always be redefined, right? The wedge bottom can always be redefined, right? Like you can always just stretch this stuff out longer and longer, and so the wedge itself is only a guideline. But what cannot be stretched out, you cannot stretch out the points on a curve. If you move it too far one way or the other, they start disconnecting, right? And so as long as the curve points are respected, you're operating within a kind of legal bounds of the price movement. And so the breakdown from that suggest yes, you're having a heavy breakdown. Okay, guys? So again, like this is kind of like the little weird stuff that I think about, but it can give you just a little bit of an extra edge, because probably people aren't even thinking about these things as wedges in the first place. You're definitely not trained to like think this way, but I do it just to sharpen some skills, and then of course, we can come back and take a look at. The traditional horizontals, and the support and the supply and demand zones and all of that. And then of course we can also look at all those indicators, right, like a Stoke and MACD and RSI. And we can also look at our EMAs, which of course are some of my favorite things to look at there. And if we do just take a look with the EMAs, there's a good reason why I have them turned off right now. If we go to the weekly, I want to show you what's happening right here, guys. This is very, very important, okay? This is very important. We are actually in very big danger of losing our 5 EMA. And if we lose that 5 EMA at 22,000, it's going to be a very bearish sign, okay? Like, guys, every time we lose our 5 EMA on the weekly, it's just been very bad news. Now, my friend Crypto Retta uses the 10 in a very similar way. You can see they kind of like hit very similar points. They track along with each other very closely. And so it's just up to your personal preference. I happen to like the 5. I basically added to what I was taught by Retta, and then I just made it, into my own way. And so I use the 5 just like for that extra confirmation, right? But you can see we never even got above the 10 on the weekly. And what we're seeing right here is a bearish crossing of the 10 and the 200, in the sense that this is just potentially something which could push us to the downside there. And so you guys definitely want to be aware of how these things are crossing. Take a look at your EMAs. This could be a pretty big move to the downside if it does end up playing this way. And perhaps I'll explore that in a shorter video. But that's your update for Bitcoin. Just to be aware of what we're seeing on the charts here, and understand that as these things start to cross, you could potentially see some more downside. Okay, that was your alpha for the day. Stay safe and happy trading.